Welcome back to Tom's Trade Rules, rule number 3, which is stay mechanical and trade without emotion. A lot tougher than it sounds, but let's get into this. It's probably one of my favorite rules that I like to bring out with a lot of the traders that I work with on a daily basis. So, of course, one of the primary challenges that traders face is the inherent uncertainty and volatility of the markets, of course. Markets going up, markets going down makes it tough to trade in any environment. But perhaps the main problem that most traders grapple with, to me, is emotional control. So emotions can significantly impact your trading decisions. Fear, greed, impatience, they can all lead to irrational choices, such as letting losses get too large, taking excessive risks, exiting winning trades prematurely. Maintaining emotional discipline and adhering to well-defined trading plans really going to be crucial for your long-term success out there. So let's talk a little bit more about it. So in rule number 1, we talked about putting a trade plan together, planning your trades around that plan. So having specific entry and exit plans is going to help you remove emotion from your trading. In rule number 2, we talked about not deviating from your plan in the middle of a trade. Stay with the plan. You can always evaluate the end of each month. We also did a segment on portfolio review. That's going to also keep you from modifying your rules and your strategies until you've really had a chance to evaluate properly how they're doing. So today, though, we're going to talk about staying mechanical and trading your plan without letting emotion take over. So one of the key emotions that I see most traders dealing with, and we've all been there, I think, is fear and greed. So fear and greed are the two dominant emotions that can significantly influence your trading decisions. Fear can cause you to hesitate, missing potential opportunities, or you might exit trades prematurely. Maybe winners, I'm afraid that it's going to reverse on me, so I got to close it at a 5% winner. And greed can lead to excessive risk-taking. I'm going to try to make more because I'm watching all these gurus on Facebook posting all of these giant winners and making $1,000 a day. And why am I not doing that? I can do that too, but my account is a third their size. Not taking profits as per your plan. Maybe you take them too early. Maybe you take them too late because you're afraid you're either going to miss out or you're going to take a worse loss, or you just want to grab that little profit, and then you don't stop your losses and you chase unrealistic gains as well. So both emotions can cloud your judgment and that results in poor trading outcomes. You really got to keep it in check. Stick to your trading plan. I've always asked, well, what are you going to do, Tom? Your trade is down 100%. My stop loss is 200. It's a 2x stop. Okay, if it's down 100 and my stop loss per my plan is 200, I'm not going to do anything. Oh, but it's already down and the market looks like it's going bad. I don't care. I'm going to take my loss. I'm going to be consistent, put the same trades on over and over, because it's eventually I'm going to have positive expectancy that my trades are going to work out long term. They don't all win. It's all good. Okay. What you want to do is be consistent and remove fear and greed by sticking to your plan. I don't fear that a trade's going to lose if it's already losing. I don't fear that I'm going to miss out on profit if my profit target's 50% and it's at 42% and it looks like something's going to happen in the markets in the next couple of days. You know what? I'm sticking to my plan. There's always a small maybe exception, but I really don't use those at all. I stick to my plan and I don't look back. Okay, so there's fear and greed for you. Impulsivity. Emotional trading often involves impulsive decision-making based on short-term fluctuations, peer pressure, news events. I think FOMO is probably the biggest one. Fear of missing out. Oh, but they've got these great zero DTE trades and everyone's making a ton of money. I got to do it. Okay, stop being impulsive. Hey, everyone's buying NVIDIA. I got to get in now in NVIDIA at the all-time high. And then it turns over on me. I got to buy Apple. Everyone's buying Apple. Everyone wants to get in on AI. AI is the thing. We got to be involved in AI. I want to buy everything that's AI. Stop being impulsive. Okay. You make impulsive trades without conducting thorough analysis or considering the long-term implications, and that can lead to losses. That's going to undermine your overall strategy. Stick to your strategies. Don't make trades impulsively. Okay. Attachment, the next one. Attachment's an emotional bond that forms between a person and someone else or something else. Okay. You can't get attached to your positions. Loss aversion, crops up as one of them. Traders become emotionally attached to losing positions, hoping that they're going to reverse so they can avoid a loss. Or, hey, I've had this Apple stock forever and it's now hitting my covered call and it's going to be called away from me. If you don't want to give up your Apple stock, don't sell covered calls in a bullish market or any market. Okay. If you don't want to sell the stock, don't sell calls against it. Okay. Don't worry about taking a loss. Don't worry about losing your trades. Don't worry about any of that stuff. Stick to your plan. If that's not your plan, don't make the trade. This attachment, can help prevent people from cutting their losses and is going to lead to holding on to losing trades for an extended period, resulting in even further losses or blowing up your account. Most people blow up their account because they trade too big, number one, and number two, they think something's going to reverse. One of the things that is another rule we're going to get to is we don't average down. I'm not adding to losing positions and making them bigger losing positions. Okay, so don't get attached to the trade. Let it go. The next one here, emotional stress. Trading can be mentally demanding and emotionally stressful for people, especially during periods of market volatility or when significant amounts of capital are at stake. Emotional stress can negatively impact your overall well-being and could lead to fatigue, burnout, impaired decision-making. If you trade mechanically, it's going to largely remove the stresses involved in trading. Okay? Be a goldfish, as per the Ted Lasso comment. Goldfish has a 10-second memory. I don't care what happens. If I get out of the trade, I never, ever, ever look back to see what could or would have been on the trade. I get out, I move on, I got a new trade working. That's all good. Okay. I can't let emotional stress get to me. Okay. I need to be pretty chill about trading. And then lastly here, let's just talk about mechanical trading. Trading with a more mechanical approach using a defined trading plan is going to make all the difference in your trading. Personal trading rules are designed to help you make a logical and rational decision, removes the influence of emotions. Emotional decision-making can lead to poor trade execution and less than optimal outcomes. I look for trades that are consistent, that are mechanical, and that are repeatable. To maximize your chance of success, it's crucial to establish and adhere to your own personal trading rules, and they should reflect your trading style, your risk tolerance, and your objectives. So by following your rules, you're going to maintain discipline, you're going to make rational decisions, you're going to remove stress, and you create a framework for less stressful, consistent performance and improvement in your trading, and it's going to reduce the negative effects of emotions on your portfolio. I hope you like this trading rule 3, stay mechanical, trade without emotions. If you like this type of trade or this type of information, go ahead and like this video. Click the subscribe button if you want to hear more about this, and check the notifications so you can see more about what I'm trading. Good luck and happy trading.